As we enter the key months of Q1, which is historically the hottest quarter of the year on the ASX, many stocks will potentially provide their best opportunity this year. And that's why tonight we have handpicked 10 ASX growth stocks that are showing real signs for big moves ahead. You don't want to miss this one, as the brains trust behind Australia's leading government-accredited share trading education and market insight that is regularly called upon by major media outlets. We'll show you the professional stock market playbook that actually works. I'm Philip Zoltevsky, joined by senior analyst Janine Cox, and we are Wealth Within. Good evening, Janine.
Good evening. How are you?
It's good. It's just the two of us tonight, but we do have a special guest coming, so that's great.
That's exciting.
Yes, market talk we're going to get into a lot and dissect Q1, which is very important. But before we move on, I want to bring in Dale Gillham, remote. Good evening, Dale.
How are you? I'm sad I'm not in the studio with you guys, but my pool here with a 40-odd degree day here down in Geelong, it's been begging me to stay here, not come up to the hot place called Melbourne.
Well, it's absolutely burning here, so you've made a good choice, but we're going to dive into some hot stock market tips very soon. But let's get right into it now. I want to start off on the seasonality aspect. And from your perspective, Dale, how important is what occurs in Q1 for the rest of the year, given we're about to embark on earnings and a lot of economic drivers in terms of data? So, I mean, you often speak about the market has this rhyme and rhythm that every, we get two significant pullbacks throughout the year. Are we about to embark on one of those, or are we about to show some big growth coming this quarter?
Well, there's an old saying, if January's bullish, so's the ASX for the year. So that's a pretty well, well-worn type of statement, but it's generally pretty correct. Generally, what we're looking at, especially in the big stocks, is that first half of the year is generally their better performance. So January, February, March, etc. But you're right, we do have two pullbacks in here. Generally, they're sort of around March, April-ish is one, and then the other one sort of September, October, November, into those two areas. And so when I know when we're doing recordings back in November, we were saying, look, the next 6 months is likely to be bullish because of that seasonality. So I would expect our market to be bullish into February, probably peaking probably late February, maybe into early March, and then come back into one of those two pullbacks that it does have during the year. But overall, I think this year's going to be pretty good.
It's definitely started off quite interestingly. But is there anything you are seeing now that could derail the typical seasonal first quarter strength that we see for the Aussie market? I want to get your opinion on this one, Janine, because obviously, as Dale mentioned, seasonality-wise, January to March are very strong. But as we know, over the last couple of years, we have a man in, globally that things can come in out of left and right and cause huge volatility. So is there anything on the cards that may derail a strong first quarter?
Definitely the Trump factor is one, which was what you're alluding to without giving any hints there.
Yep.
And also the RBA. We're moving into a different phase now with the cash rate, so potentially a rise coming up, and possibly a couple this year. So that's what I'm seeing. Yeah,
because that's coming next week. Obviously, we're getting the CPI data tomorrow.
We don't want them to do it, but we know it's coming.
Are you leaning more towards potentially?
I have been all along and been expecting it. I noticed that commentary shifted towards a rise this year, towards the end of last year. I think they were still saying no, and then they changed and said, yep, we think that there could be a rise, and now there's more commentary coming into that effect.
Yeah, and just quickly before we get into the good stuff, which is the stocks, in terms of how that affects the share market growth-wise, because we're going to look at growth stocks, the ones that are going to give us the good appreciation. Is there any tie-in with how that affects growth stocks in particular?
Definitely, especially in the short term. If the RBA chooses to up the cash rate by 0.25, I don't see that as being a big deal at the moment. But if they indicate that there could be successive rises, that's when the stock market's going to really try to account for that. And if there's a bigger hike like 0.5, I definitely think that there'll be something in there that will, cause a bit of instability in our market. But looking forward, I still think 2026 is going to be a good year and is going to be a positive year for the Australian market.
Yeah, great stuff. I mean, you've been right so far. So let's keep going. Now, on the stock front, it is time to dive now into the 10 ASX growth stocks that are looking very, very interesting right now. And as mentioned, this is the perfect time for it. So what have you got, Janine?
Well, this is really exciting, everyone. So looking at some of these stocks here, AZJ has been down. Horizon Holdings has been down for some time now. This is purely just based on technical. I went about this because normally we'll have a look and see what sectors the stocks are from, and as you know, and we'll have a look at their fundamentals to see where they're coming from. But I thought let's just look at the whole top 200 and see what looks like some of the interesting ones out there. Now, I had 20 to start with. There were 20 stocks. Obviously, we can't fit all of those in, but Horizon looks interesting from the point of view that it has been trending down for some time, bottomed out around $3. But if we look at the history of the stock, that's what really is a standout for us. We love to see these interesting support levels come in for some of these stocks, and this is what Horizon has done. We saw strong support coming in there across from that. You can see even all the way back into 2011, and we do look long term to see whether these levels are likely to hold, which it has. Horizon's found support there, had a great run for the last 6 months or so, but really important to see that test, especially for a stock like this that's been in a long-term decline. So that we're now potentially seeing that because the price looks like it's coming back. In the short term, there could be a bit of resistance just overhead. So if it goes up from here, you can see that there's around 10%. But beyond that, this is 20, possibly 30% upside from there if it does get going above those levels.
Yeah, it's really interesting. I mean, you do this long enough for our shows that we do, and you see these themes recur from time and time. And I think with 2026 starting, and I want to get your opinion on this, Dale, in a second as well, is we're looking at sectors and sometimes we break down those sectors, and, I've had calls, we've had emails come into the studio about how people are saying, well, that is, you look at the sector and you think that's where the growth must be from all the stocks. But it's not the case, and sometimes often just going stock specific is the thing that's going to get you those real outsized performances. So can you speak a little bit to that? Because
yeah, sure.
I am seeing this theme with people thinking that is the only way, but there's more to it.
Yeah, and then often, exactly, that's a really good point, because often then they're late to the news when that happens, because there are stocks within sectors that may not be the hot sectors at the moment that then take off. But by doing it both ways, there's two ways. One is to look at the sectors and do this whole broader perspective, and that's one of the things that really is exciting from a big picture point of view, to do that broader sector analysis first, which we teach people how to do that, and then drill down from that, and then looking at the individual stocks within it, so that you're not just looking at it one way. So that's where Horizon sort of ticked quite a few boxes, provided it keeps going up. Yeah,
now I want to get the Chief's opinion on this, because obviously you wrote the book, Dale, How to Beat the Managed Funds by 20%, which covers a lot of portfolio construction and getting stocks right in terms of getting that timing, which is often spoken about on the market. So if anyone is interested, this is a great introduction, How to Beat the Managed Funds by 20% by Dale. It is free. You just have to pay the shipping. The link is in the description below. But just on that, Dale, your thoughts around this, because it is a theme that I'm seeing pop up in terms of going big picture, looking at sectors and then diving in. What are your thoughts in terms of getting stock specific, more so than just going that big picture wrap first?
Well, you have to. I mean, it's like I was saying the other week, you trade the stock, not the index, but you also trade the stock and not the sector. And when you're looking at, our market is very top heavy in terms of financials and materials, as we know. Those, the top 20 stocks, I think 11 of them are financials and materials, maybe a little bit more now. And obviously the US market is top heavy with tech, whereas our tech sector is like 2% of our marketplace. But then when you go down into each sector, you're looking at, well, what stocks are in that sector? So healthcare didn't do as well last year, and it's run by Cochlear and CSL, and tech sector has zero, so the tech sector wasn't fantastic last year. So you're looking at these different sectors and going, well, the sector could be moving up or down, but it doesn't mean all stocks in that sector are moving up and down. And I know recently, with especially CSL in that healthcare sector, hasn't done very, very well the last sort of few years, and it's fallen very, very heavily. A lot of investors and traders are, sort of had a look at that and they go, no, it's a dog stock. Why would I be looking at that? But that's where Janine and you and I get really excited, because good traders are looking at things that other people aren't looking at, because what goes up must come down and what goes down must come up, especially if it's a good stock like CSL, like your Cochlears, and some of those things. And obviously with the telco sector, pretty much has risen, actually rises and falls based on the fortunes of Telstra. So you can't just look at the sector. You've got to take a deep dive into that, into the stock, and then trade the stock. So that's what I'm suggesting people do now. And they need to be a little bit more specific this year, more than so generally or broad like we might have been in past years, because we are searching for a long-term high this year. When it's going to come, I'd like to be able to ring the bell, but at this point in time, great time to invest, great time to trade, but you got to pick the stocks.
Yeah, I'm glad you said that. That is a hugely important point in terms of being that stock specific around this time that we're in, because, it is everything in terms of getting your exits right and also getting those real outsized opportunities that maybe the market isn't catching on to just yet. So let's go to the next stock on that point.
And the next one is one that you probably know that I was going to have on the list.
Let me guess, BHP.
Sorry to bore you with that.
It's all right.
Look, we have to have this one on there. Look, BHP, FMG, whatever it is, we're talking about short to medium term going forward with these stocks. BHP looks fantastic. We've got an interesting thing on iron ore coming up for our trending topic, which you've got to stick around for.
Yeah.
And this could have huge implications for BHP. But we know that BHP's been in battle with China. And, at this time of year, that's always the case. It's nothing new. China's still got chugging along. It's not going anywhere anytime soon. And BHP's looking for other markets. It's looking like it's finding support at this level at $40. It's coming up to challenge prior resistance. I think once it does that, I think it will settle down, but it needs to break through those levels to confirm that it's moving on to that next phase that we're looking for. But again, some really good trades likely in 2026 out of BHP. If you're not in it yet, just wait for the next pullback.
Yeah, and especially stay tuned for what we got coming up next, because it is going to cover a very, very hot topic right now that directly relates to BHP. But let's get to our next stock now, Dale. I believe it is in the financial sector. This one has been looking very interesting for a while.
Look, it has been, and this is sort of an example of what I was sort of talking about with like a CSL, because Magellan Financial, MFG, as we definitely know it, it had a fall from February 2020, and it fell from a high of 74.91 all the way down to October 2023 to $6. So we're talking about roughly a 90% fall. And so a lot of people wouldn't have been looking at this stock simply because it had a 90% fall, and people are just going, why would I have that? It's falling away. But then you get those other people that think, let's buy cheap, and all the way down, if we're looking at the chart, if you're all the way down, people would have been trying to buy this stock cheap, because if you look at it, it's had a massive, massive rise from, that 2011 right up to that high there in 2020. So a huge, massive rise. And if I put my little, where is it? You can see even from about June 2018 up to that high, it was 243%. So people would have been buying it on this way down thinking it was cheap, but then as we all know, stocks can always get cheaper. The exciting bit is since that low in 2023, it's tried to move up. It's moved up quite nicely. If I get rid of some of that, you'll see how big it is, but really, really nice move up from that low. It's, if I measure that, you can see there, it's just over 100% up into that high back in January last year. Took a dive over 3 months, right back down to where it was, tested that level, and now it's looking a lot better, rose strongly again, so nearly 100% rise again. So we're seeing quite a volatile stock, but right now, January is not looking that great. So, but I do like this stock. Stick it on your watch list because it is holding up around this level. Now, it might keep bouncing around a little bit, but it is looking really, really good. Although, and from a point of view of financials, I'm not super, super bullish on financials this year. I think our big banks have had a good run over the last sort of year or couple of years. So I think we're going to be looking at some of these stocks like Magellan, maybe some of the second-tier financial stocks, etc., as well. But I do like it at the moment. But as you can see there on the weekly chart there on the right of the screen, since August, this stock has fallen away right to that low there back in November, but it hasn't been super bullish. If you can hold above that level, that $8.67 level, find some support and start to move up again, I think this might be a nice long-term trade over the next couple of years. But stay tuned on this one. I don't know what Janine's thinking or you're thinking, but I like it at the moment.
Yeah, and I mean, how important is it? You've probably seen this more than both of us in terms of people looking at stocks that represent this type of price action, where they fall away for many years after really having that euphoric type run, and then you see people, they fall in two camps. They either have a go at it, and it goes the other way, and then they completely throw it away, and you see comments like "it's a dog, it's done," all that kind of stuff. Or they, watch it on the way down and think, well, maybe this is not for me, and then wait for it to completely get back to the upside, maybe giving away a lot of that really nice opportunity that they could have gotten if the timing and the technicals were on point to get that best risk reward. So I think, speak a little bit to that in terms of potentially, as you said, this is the perfect time to watch a stock like this, because those outsized returns can often come on these moments.
Yeah, well, I mean, the biggest mistakes traders make, and I'm using the word trader very generally as a big umbrella statement, because there's a lot of people out there that call themselves traders that probably don't fit my definition of a trader, and maybe even yours. But the biggest mistakes they make is they get in too early and they get a falling knife, or they get in too late. And a lot of people want guarantees. They want a stock already making lots of money, but as we know, we can't buy yesterday's returns. So the best traders are looking at what other people aren't looking at. And what they're looking for is the unloved stocks and waiting for them to turn around in price, and then waiting for the confirmation. So there's a few steps in that process. So I'm already doing lots of analysis on stocks that have been falling away for quite some time. They're very good stocks because their fortunes will change. And you'll see somebody might post saying, well, have a look at the fundamentals on this stock. It's, it's terrible. It's not making money, or X, Y, and Z. And they have this whole argument of why we shouldn't be looking at that stock. But one thing we know for certain is those fundamentals change, and the fundamentals that we see are lagging. And probably one of the prime ones I saw quite a few years ago was Aristocrat Leisure. It didn't have a CEO. It had fallen 90% in price. It was like really bad shape. It hit a bottom. It found some support, and then it rose hundreds of percent in the next year or two, unbeknownst to a lot of people who just dismissed it as not a very good stock to be into. But it took off like a rocket because it was a well-managed company, got a new CEO, and then just took off. So to me, don't discount stocks that are unloved, because they're the ones that you need to get into, because you want to get in before the huge rise is. And they know the smart money is getting in near the bottom somewhere. And we also know that the amateurs are getting in somewhere near the top. And that's why a lot of amateurs get stuck. They sell out too late and get in too early. They're the two major things that I find traders do that aren't necessarily as educated as what they should be.
Yeah, I think it just proves perfectly from what you're saying that timing matters more than ever, and really getting that growth. So please, that's what we do best here. Go and check out the website and have a look at our trading courses. You'll really find some interesting stuff there, and also the testimonials. Some of our students are doing amazing things right now. So, and it's all because getting that timing right. So next stock, Janine, what have we got?
Now, this is probably going to surprise Dale a little bit, but we have talked about the banks together, and although I know that he's not super bullish on them at the moment, CBA turned into a growth stock because it was still going up last year, even when the dividend wasn't. The dividend was obviously shrinking as the share price was running on, and it kept on going. And so that tells me that CBA has turned into a growth stock now, which means that in the next run that we see CBA make, it's probably still going to be a really good one. So I'm watching CBA, and it's come back to a very interesting level here. We thought it perhaps could come back to around 130. Now, there was a broker that called it $100 and we laughed. Now, maybe the egg will be on our face if CBA does come back to $100, but technically I cannot see it coming back to that level at this time. In the next 12 months at least anyway. I'm looking at CBA pulling back to these levels and then having a really good rise. The key will be having the right set of rules to get back into it. Because as you can see, this pullback that we saw on CBA sort of set the trend off on a different angle right now. So it's not simple. So this is where you need the skill. You'd think, CBA is simple stock to trade. Historically, yes, but going forward, you need a higher skill set for this one now.
Yeah, it's so interesting because, I mean, you look at CBA and it is one of the biggest stocks in our market. Such a big, strong business as well.
BHP and CBA, you know, they're battling for that position, aren't they?
Yeah.
I don't even know if BHP's passed them yet. It might be now that CBA is coming back to these levels.
And doesn't it just prove, I mean, look, even a stock like this, being able to be technical, being able to know when to get in and out, as you said, identifying a change in buyer and seller relationship, it's crucial, even for the big stocks.
Exactly.
Yeah.
Good point.
All right, next one.
All right, NHC. Now, some may be surprised that I'm looking at this one. It's a coal stock, but it's had this massive decline. And, you know, just looking at it from a trend line perspective, simple, but effective. And that's why Dale's got that in his course and why he's got that in his book so that you can learn from it. But, you know, it's gone through that level at the moment. Now, it's tackling some resistance at the moment, sure. It's in a sideways move more than anything. So the directions, even though the longer term direction's showing us a positive, it's still tackling the history of this stock, which shows us that, you know, this high here in 2019 has proven to continue to create a resistance point for this stock. But, you know, is it about to break out of that? If it turned and went back towards $4, I would say no, it's probably heading south. But at the moment, it's looking interesting.
Yeah, looks crucial. I'd have this one on the watch list for sure. Dale, did you want to add anything on NHC before we wrap up the first round?
Look, I like what Janine said. I think it's looking really, really good now. I mean, anybody looking at that stock, you can see there, as Janine said, rightly so, on the monthly chart, it's above that trend line with a little bit of resistance. So it's one of those stocks you don't have to get in too early. You know, it's like a lot of people I see, they take that big risk and they just jump into something really, really early, thinking they're missing out. And there's two things that I see psychological wise that traders have issues with is they see a stock moving up. And if you look at this, it had a huge big move. And if we put my little tool on here, you can see from that low there through to that high, that's, you know, 25% move over 1, 2, 3, 4, 5, 6, 7 weeks. So you see people and they go, wow, I wish I'd got in here, and they're thinking they're missing out on money. But is that a safe space to be in, or a safe space to enter into that stock? And the answer was probably not. And the thing is what good traders do is they see some of this sort of stuff happening, know what's going on, know where the resistance is, and they wait for the best entry, which is a safe entry, but an entry that's confirmed that it is going up for the longer term. So I totally agree with Janine. I think, you know, we might see a bit of a pullback here on the stock, and then the next move up would be a really, really safe move on this stock if you do watching it. So, but good pick, guys. I really do like that.
Yeah.
And I was quite surprised that Janine liked it because it's in coal. So.
Yes. I mean, a good stock's a good stock, right? And it's good to have you both.
Hey, we're not talking about uranium here.
Yeah.
And you're not that far away that I can't reach you.
Oh, thank you. Yes, you can. No, you'll see me again. And so I'm trying to be nice here. But no, look, you know, to me, coal, you know, it was on the nose there for quite a while. And we found a lot of coal stocks, and especially a lot of energy stocks, not doing that well. But I think they're turning the corner now. And I think we're seeing a lot more activity in that space. And I do like it. And one of the things I think we should be seeing this year is a lot more, you know, M&A activity on our marketplace. So I'm already seeing some signs of that. That's also one of the big signs that the market is maturing, and it could be a very nice bullish year if you start seeing a lot more M&As, which I think some of them are going to happen in the energy space. Could be some of things like rare earths, lithium, those sorts of stocks, and also in AI. So just check out some of those spaces for some possible takeover targets. Yeah,
great point. All right, now that wraps up our first round, but we have more amazing stocks coming shortly. But now time for our trending topic this week. Janine, this is a big announcement coming out today.
Exactly. Who said iron ore's best years are behind us? Geologists have confirmed the discovery of a monster deposit reported to be around 55 billion tonnes of iron ore, said to be worth around $6 trillion US, and it may be the world's highest high-grade deposit. This is a game changer for Australia, already the world's largest iron ore exporter, and shores up supply for decades to come. The Department of Industry and Science had forecast Australia's iron ore exports would fall this financial year to $107 billion from around $117 billion the previous year. Iron ore prices have been subdued. This is expected to continue in 2026 due to stable demand from China. Now, Barclays expects the price of iron ore to average around $95 a tonne in 2026. So let's take a look at the chart of iron ore and what we can expect. All right, it has been tracking sideways, but it just looks poised to me to take off, and it's timely that this news has come out about this massive deposit.
Yes.
Although interesting that, you know, China's still stockpiling all the while, and they're saying that forecasts are for stable demand in 2026. Looking at this chart, we can see that there's a really key level at around this $102 mark, which is where iron ore has recently found support in November. Now, we need to watch this space as well as watching the stocks, be watching what the iron ore price is doing, because this is key. I mean, if iron ore slips back below, now if it heads back to 97, which is that average that Barclays was talking about, that's not out of the question. But if it heads back towards $94, then obviously we're talking about a different scenario with iron ore falling away, and that would be a risk of it taking out this to 2022 low. At the moment, I'm not seeing that. I've been expecting, and I did a podcast. I've done numerous podcasts recently on BHP.
Yep.
Iron ore, I think I talked about Rio as well, may have even thrown in FMG, but also on the iron ore price. And so if people haven't had a chance to watch that, make sure you tune in and listen to the podcasts, and also just continue to watch this space, because we will bring you more on this area. Now, looking at the upside, if we go back to that chart, you can see there that from an upside perspective, I'd been expecting easily $120 for iron ore based on the techniques on the chart, not on the story that's been out there. But there is a potential for iron ore to trade up between 130 and 140 this year and into 2027. So like I said, there's key levels at the moment that are going to tell us which way we're going, but I think it's sort of just going to drift a bit higher over time for now.
Yeah, and I mean, just on that point, it's not completely a determinant how the company performs based on the iron ore price alone. So
BHP's cash costs are so low that it's not funny, and it's done an incredible job to get there. So we're talking about mega profits even at the current price level. Yeah, fantastic. All right, now moving on. If you want the skills to analyse stocks just like you have seen tonight, visit our website, wealthwithin.com.au. But now let's get back into our trending topic and get into some more stocks. Janine, what have you got for us? All right, this is a little interesting one here. Weebit Nano, which some of you may be following or may be trading right now. It's just broken out through this prior high here of 557. This week's bar looks incredibly strong. It's up around $6, but the trajectory is still really positive for this stock. It's following a beautiful trend moving up. If I can just put the angle of that trend on the chart so you can have a look. You can see that really nice trend that's come in there as it's continued to rise up. It's gone away a little bit from the trend at the moment, but I don't think it's anything that the stock can't handle, because it's through this really important level you can see on the monthly chart there at the moment. Now, stocks can always retest these levels. It's not to say that it may not have a retest. It could, but I'm seeing somewhere between $7 and $8 for this stock in the short term anyway. Yeah, and can I just say there's a few stocks coming in our viewer question section, which to me are even more impressive than what you're seeing right now, but I don't want to give too much away. So let's get back to the stocks. Dale, can you bring up the next one? I believe we're going to the energy sector.
Yeah, I can do that, but can I talk a tiny little bit about Weebit Nano? For sure, yes. And the reason why I want to talk about it, and a lot of people don't understand with some of these stocks, is they've got to mature. And I know Janine's said this in the past on many, many shows, as stocks start to move, they start to mature. And what we're actually seeing, so if we look at my chart on my screen, look at these early days, the stock was really, really speculative. And you can see here, the volumes were really, really low. And then obviously into sort of 2020, volumes took off, and then they dropped right away till 2022, 23. But more recently, the last 12 months, look at the volume here. It's very, very consistent right across here. And we're seeing it coincide with this nice big bull run. And what we're looking for is it's the law of averages is really what we're talking about here. If you've got a lot of participation in a stock, you're seeing better moves. You're going to see better trends, more sustained trends. You're going to see less erratic behavior on a stock. It's going to be easier to trade. There's a whole range of benefits of having a lot more volume coming through a stock. And so this is exciting to me to watch a stock like this. And even though, the move up from this low has been huge, you can see there 336% since that low in April last year. Massive, massive move. Now, it wouldn't surprise me if it cooled off a little bit, but it's showing me potential for a big long-term move over years. So whilst it could be a short-term opportunity, I do like this stock, and I think you've done well to pick it. You just got to pick the right entry point for yourself. But let's move on to the next one, which is Viva Energy Group. And when you look at this chart, you can see this big move up from that low there from March 2020 all the way up to that high in April 2024. Beautiful big trend over roughly 4 years. And you can see the move up there was 224%. It's come back down and really found some support there. You can see $1.41 is that low, which is above that 2020 low. And to me, that's not surprising with a new sort of company on the marketplace. And you're seeing this. This is a nice bullish move, although I would have liked to seen it not pull back as far as this. But going over to the weekly chart, looking at this again, it's tested that low again. So you can see that low there of $1.41. It moved up, came back down into September last year, hit $1.70. So it's now telling us this thing is finding some really good support. And so I would think what we're going to do is start seeing this stock start to move up. So it's a really, really nice early opportunity. And the reason why we pick stocks like this is we want to give people time to do their analysis. And that's what really good traders do. They're stalkers of the market. They're not actually waiting. They wait. They do their analysis. They do all their research. They look at what they're going to do, what rules, what strategies they're going to use on a stock. And when the stock does what it confirms for them it's a buy, then they buy. What I find a lot of people do is they see something move and then there's a knee-jerk or emotional reaction into that stock, and that's why too many traders get in too early, they get out too late, and they make mistakes. So, looking at this chart again at the moment, look, this is a beautiful little pattern that's forming right at the moment, but I would look at, anything above that sort of level, that at $2.20 odd level, I think it'd be a nice little buying opportunity on this stock. It looked like it's crossed trend lines. It's doing everything it needs to do at this moment. So I like it.
Cool. All right. Keep this one on the radar there for later on. Now, let's get to the next stock, Janine. What have we got?
Now, Woodside, there's a really important thing here with Woodside.
Okay.
I know that there are a lot of people watching this stock saying, when's it going to take off, guys? Because you said it was going to take off. And look, we've talked about it on the show, and it's consolidated. And look, what this has done, it's really saved you. This pullback has saved a lot of people from making an error of judgment about the timing of when to buy Woodside. Now, we did identify a really important level for you across here. The interesting thing that a lot of people don't understand about these stocks is how they move. And this is why it's important not just to look at something, but when you learn something, you can read about it, you can look at it in a pictorial form, but it's not until you actually do it that you actually really get it. Yeah. And that's the difference between someone who's prepared to invest in themselves to learn and someone who just wants to skip around the edges.
I learnt that in martial arts. It's different watching someone else get punched in the face versus when you get punched in the face.
Not quite sure about the analogy, but there could be some similarities in there with the stock market. All right, okay, so let's have a look at that rise there. You can see now each time that Woodside has made these moves, it's done the same sort of thing. It has to rise before it can fall. So even if it was going to fall, we still think that there is a high probability for Woodside to head up between maybe $30, $35 or thereabouts. Best case scenario, of course, is it heads back up to the $40, but that's sort of pie in the sky at the moment, given it's sideways. But it still looks poised to go. If it doesn't do it in the next 6 months, I don't think it's going to do it. So that's my big call with Woodside.
Yep. Dale, now we've got to get your thoughts on this one, given it is a stock everyone is talking about. Are you in the same camp as Janine? 6 months to move?
I try not to argue with Janine because it generally ends up with me getting hit somewhere. But look, I do agree with Janine. Woodside's been one of those ones that's like, is it going to go? Is it not going to go? And we think it's going to go, but then it doesn't do it. As Janine said, it pulled back and it saved a lot of people a lot of money. And this is one of these important things. People say, you see them comment all the time on their YouTube channel. You said this was going to go up, or you said this was going to do this. We don't control the stock at all. We don't even control what they're doing. We can just make our assessment on what we actually see today. That's it. From tomorrow, we might get more data. There might be an announcement. There could be something going on. And it changes our opinion on a stock. So what we're seeing at the moment is what Janine said, and we both like the stock and we think it should go up, but we don't control it. We're not, when the money's on the market controls it, and the big end of town, they're the ones pushing money through it. And so what we try and do is, that's why we always trade on confirmation. So we see something happen and then we make a decision, but we're always prepared for it. And that's what I was saying a little bit earlier. We stalk the market. Good traders are like a lion in the jungle. It sits in wait in the long grass, waiting for the prey to come to it, because it knows it's only got so much energy. And when it does that, it can then hit the target pretty hard. And that's what traders really do. And I was only talking to some of our graduates a few weeks back before Christmas, and they all said to me, the biggest thing you've taught me, Dale, is patience. I make more money with a lot less effort because you've given us patience to wait for those great trades. So I'm making less mistakes, I'm making more money, I'm trading less, making more money. So, it depends. If you look at a stock like this and you jump in too early, then you might get stuck in a pullback. But if you get at the right time, you make a lot of money. So I have to say that I agree with Janine.
Yeah, well, it's good to hear. I mean, the key word there is patience, like you said. Obviously, knowing that he's going to give you everything in terms of getting that right move on time.
You got him on the record. He said he agreed with me.
I was waiting for you to say that. Yeah, all right.
It's healthier if I listen to Janine.
Yeah. Well, now I'm glad it's all out in the open on the record. Let's get to the next stock.
All right, let's have a look at Webjet. This is a bit of a surprise, isn't it? Because Webjet made the cut just, but it is strange the way that this stock has formed, and there is a risk in the short term of further downside with it. It's possible that the recent fall hasn't finished. I haven't looked at the information to find out why this sudden sell-off happened and the stock got sold away. But one of the interesting telltale signs of when a stock has stopped falling is when you see it skid like this. The lows aren't getting much lower anymore. Whatever they were going to sell off, they've sold off. And now money's coming in and saying, oh, maybe this is okay, and they're picking it up at lower prices. But you can see on the weekly chart, this is a sort of a classic. Now, mind you, I have to say that this is a higher risk proposition, but you can see this sort of pattern here that's formed on this chart, on the weekly chart across here, where it's a huge consolidation. Now, this could be a distribution where they're just trying to eke a little bit out of it before a further sell-off and slow the whole thing down. And that's another thing that a lot of people don't understand, is that they might be able to buy and sell and say, oh, I've got a strategy to buy this or buy that. But then how do you look at the big picture of a stock when you're looking at it? If at all, do you? Do you know where it is? Is it trading within a decline, or is it trading within a big picture rise? Is it a part of a sideways move? That's a skill that gets taught to people over time, and that's what we do, and we've packaged it up in a way that you can get all of that quickly rather than having to learn by experience over many decades. So, and that's one of the key things to learn. So looking at the chart here, we can see...
Just on that point, I mean, it's such a huge point. You're right. Most people think they get a set of buy rules and a set of sell rules, and that is it. Yeah. But where's the context?
A bit of price thrown in there, which doesn't mean a lot until you know how to do price properly. Yeah.
And like you said, being able to answer that important question, where to next? Am I on the right side of the trend? Am I on the wrong side? Is this a short-term play? Is it a medium-term play? All that will dictate, by answering that question, where is the likely move next? So important. Exactly. What does everyone else do? Get indicators. Buy now, they've crossed.
Well, indicators would give you so many ins and outs through that process that you'd be feeling really dizzy after the whole thing.
And you still haven't answered that question, where to next?
Exactly.
So important. All right.
So with this one, I think that we need to see a bit of a breakout here. We could see it rise up to trade between that $6 and $7 mark. But, it really needs to do that first. The first thing it's got to do is get through $5. That's the key level that I'm watching here. If it does that and does it strongly on that monthly chart, then the rest of the information will marry up on the weekly. So,
all right, so not just yet,
but a bit higher risk one, this one, Phil.
Cool. All right, let's get to the next one, Dale. WiseTech Limited, I believe.
Yeah, well, I mean, it is WiseTech Global. Again, it's one of those ones that most people wouldn't look at the moment because it's been going south, but it's exactly what you guys were just talking about. I was only chatting with a student about a week ago about this, and he was saying, looking at stocks, where do I start? And I go, well, you've got to find your roadmap, because it's like, if you want to go to anywhere, whether it's Melbourne to Sydney or Sydney to, Singapore, first you've got to figure out where you are, and then you've got to figure out what's the future look like, which is what you were talking about. It's that white space on that right-hand side of the chart. And too many people look at where they are in the stock market and get that buy signal, as you said, with indicators, and then they don't understand how the market's going to unfold. So, and the thing is, I always look at, there's an analogy, like if you press your face up against a stair in a stairwell, do you know you're at the top of the stairs, the bottom of the stairs, the middle of the stairs? Where are you? And you don't know. So you don't know whether you're getting in at the top of the run or the bottom of the run or the middle of the run. So looking at this, when you go to have a look at this chart, you've seen this massive move down from that high there in November 2024, $141. Now look at it, it's around $60 now. So if I go and look at the tool, you can see at the moment it's fallen somewhere around 56% or 57% in price. Most people wouldn't be looking at that stock, but somebody, like myself and Janine and yourself, we are looking at this, because these are the sorts of important areas you need to be looking at these stocks, because when they do start to turn around, they are phenomenal trades when you get into them. And they're really, really safe trades as long as you're getting in at the right time, not too early, because you could be catching a falling knife. So you need to understand where the roadmap is. And if the roadmap says this is likely to stop falling here, and then over the next 1, 2, 3 years, it's going to be doing this, that's what we teach people, how to predict where the market is moving to and what stocks are moving to into the future, and whether now is a safe time to buy. So let's go back to the chart and have a little bit of a look. If we look at the weekly chart, you can see it hasn't stopped falling yet. And that last bar on the chart, that's just today's data, because today's the market is open. But what we're seeing here is that low there a few weeks back there in November was 61.49. This low here last week was 61.30, so a little bit lower. So it's not giving me enough signs yet that it stopped, but if we might see it bounce around here for a little bit, for a few weeks, or maybe a month or maybe 2 months, and it starts to move up, this could be an amazing trade over the next year or so, and people could make some real easy money. But right now it's way too early to get into it. I'm talking weeks, if not a couple of months too early. But again, it's what I was saying earlier. We're giving you plenty of time to look at these stocks, do your analysis, get your trading strategy on these stocks together, be patient, and then jump in when they confirm they're going up, not because you guess that they might be going up, which is one of the things I find a lot of people do when I talk to them, when I meet them on the street, and they say they bought a stock, and I go, why did you buy it? And they go, I think it's going up. Well, I think is never any good to me. It's not a trading strategy, I think. I know is a trading strategy. So when you know it's going up, that's the time to get into this stock. And hang on for the ride, because it'll be a good one.
Yeah, great advice. All right, now before we move on, let's get the favourites. Janine and Dale, what are we thinking? One stock only, Janine.
Oh, he's cut me off already. I'd say VEA at the moment, just because of the setup that's there. Otherwise, AZJ.
All right, fantastic. That was nice and quick. Dale, favourite stock?
Bam! I was going to pick VEA. And I hate agreeing with Janine. I'm having to agree with a VEA. But I do like WiseTech. I do like that one, Appen is another one I'm watching at the moment. Again, way too early, but I'm still watching that one at the moment as well. But I think some of these smaller stocks like that could do really well, but VEA is my pick.
All right, there you go. Fantastic. Now, moving on, shortly we are going to get into our hot stock tip, which has had some massive news come out today. But first, let's answer your questions. David writes, can I get your opinion on TWE? I can see it's coming towards some potential strong support, and I'm interested in entering if or when confirmation occurs. Looking back throughout its history, especially the first 8 years or so, it was a beautiful trending stock. Hopefully that personality hasn't been completely lost. Any thoughts would be appreciated, especially with regards to possible red flags. All right, Janine. Now, this is another one in that camp where it's been falling away for a long time.
And interestingly, this was one of the stocks in that 20 that I picked out.
Right.
A bit more speculative because of the decline, but I do like it. So good pick there on your watch list.
Now, in terms of when you're looking at this, because I really like his email from the point of view of not just saying, hey guys, tell me what you think in terms of the upside. Red flags also, which is the way you should think as a professional trader. You think of the positives that can happen on the situation, also what could go wrong. And then you work out your risk reward from all that, which is fantastic to see. So with TWE, maybe in terms of positiveness and also some red flags.
The red flag would be don't make a decision about this one when you're drinking their wines. That's the first one. I think too many people have just looking at that chart.
Yeah.
So we can see how far it's come back, and it's come back to a really important level there at around $4.50 to find support. So that's the first thing. Red flags could be, obviously from a fundamental perspective, trade information that comes about with the business that TWE does in terms of exporting their wines.
Yeah.
So that's one. As far as the red flags on the stock market, on the chart are concerned, first one is that it's in a long-term decline. And that means we need more confirmation before we would consider purchasing it. It's so the novice is going to try to get it at the bottom, and the more experienced trader is going to say, no, we're really willing to risk our money because we're not just focusing on making money, we're focusing on the risk side of it first.
Yeah.
And looking at that, right now it looks like higher risk. It's just starting to give us some indication off the bottom. You can see here that the buyers and sellers are trying to reach agreement right now. So this is the time when you don't want to be in the stock. Hopefully you haven't ridden it all the way down, but if you haven't purchased it yet, that's great. And you're just waiting for some more confirmation. I would say usually a stock would be bouncing around for a few months, after a fall like that before you'd be willing to take it. And as Dale said, it's just about patience. So, and waiting for that stock. And often stocks can move up quite a bit, 30 or 40% off the bottom before you'll actually get a really good signal from it. And this may happen with TWE. So, it could be that a monthly rule works better than a weekly rule in terms of being flicked in and out of the stock. But that's something that, as a trader, you have to prove to yourself before getting into it. And the fact that whether it's traded down to an important level or not, or is so much far below its all-time high, which is $20, nothing is cheap, and it doesn't, exclude you from doing the same due diligence that you would on any stock, even if it was in a trend going up.
Yeah, great advice. The best advice I can give you is rewatch what Janine just said, because there's a lot of gold in there in terms of what comes next for that stock. But anyway, let's move on. Chris's email is next. I really like the look of FPH and would like your thoughts. Compared to the other ASX 100 healthcare stocks that have fallen away over the last 18 months, FPH has consolidated nicely and looks close to breaking higher or lower in the coming months. I have some great results from backtesting and would enter the trade when price trades above the all-time high. All right, Dale, sounds like someone who knows what they're doing in terms of doing some backtesting and having a real defined markers on where the stock's going to next. What are your thoughts on that email?
Well, if your backtesting says you've got good results and that's your entry, then go for it. To me, it's always follow your backtesting. And it's interesting when you talk to traders and they say, I entered here or I exited here, and you say, did you follow your trading plan? And how many of them say yes and how many of them say no? And generally the ones that say no, they're the ones that lose the most. So to me, Chris, stick to your trading plan. I think that's great. But let's go and have a look at the chart, because you're asking me about the stock. But as I said, I wouldn't go past your trading strategy. If you backtested and it's done really well, stay with that. But you are right. If we bring up the monthly chart through here, you can see the previous all-time high back in July 2020, and you can see here more recent moves are all up around here. But look at this, we're now starting, if you look back here, that was prior to more recent time, that was the highest close it had, was 33.56 roughly. And you can see here, we're getting all bars below that sort of area at the moment. So to me, there's a lot of resistance all around that area. But I tell you what, if it does break through that area like you're talking about, Chris, I'd be jumping into this stock because I think you've done some really good analysis. I think this next run is going to be a lot steeper than what we've actually seen. So if I use my trend line, you can see the momentum is like this sort of momentum. I think if we do see it break above it, I think your momentum's going to be a lot steeper, more something like that. So it's going to be one, but you've just got to watch out. Often when we see stocks break out, they do a retracement back into a consolidation zone. So if I got an, no, I haven't. Let me just use another tool. And it's not coming up. But you might see it break up, come back and hit its head on this top part of it here. If I just throw that there, you might see it break up, come back, drop below this horizontal line and then take off again. So you might get 2 bites of the cherry if somebody out there is not as comfortable with trading rules as you are, Chris. You might be able to break. You're getting out when it breaks above that. But if you miss out, you might get a second chance as it takes off again. But I like what I'm seeing, Chris, and well done for your analysis.
Beautiful. All right, well, Cameron is next and writes, I bought GQG back in December at about $1.80 and I'm still holding it now. However, I am a bit skeptical on whether I should still be holding. Where would you guys go to look to find good information on GQG? Now, this is an interesting email, Janine. I'm going to ask you first, then I'm going to get Dale's thoughts on this one. It always, I guess, heightens my awareness or the alert signs come on when someone asks, where do you find good information on a stock that they've already bought? What are you thinking? Yeah,
to me it spells no strategy, firstly, and sorry to say. I mean, look, where you bought the stock is probably part of the challenge here more than anything, not just information about the company, because obviously we're talking about the technical analysis. That's what we're here to share mostly. But if you're talking about wanting to look for information, does that mean that you're trying to justify why you bought it? That's the first thing that I'd be wondering. And I think it's a brain shift to sort of get away from that thinking and move like, oh, what's happened all of a sudden? Maybe there was some good news and all of a sudden the stock's gone the other way. This is a wake-up call for you, because this is what the stock market does. They put stuff out there. People, unsuspecting people who are, mums and dads, investors, may not have the knowledge. They get caught up in these sort of things, and then they come in and then they sell it off because they've been trying to hold the price there potentially, so that individuals pick it up and that allows them to get out. They've got to create that liquidity. Sometimes that can happen. So if you are aware of that when you're going into the stock, that makes you want to be more prepared with everything that you can possibly arm yourself with, which is why we're here to help you do that. So you can contact us at any time for that help. So that would be the information that you need. It's about getting educated. But if we go back to the chart, Phil, just to have a look at where the issues are here. One is, as we said with the other stocks, it was in a long-term decline. It may have found support from this sideways move, and that is the short-term rebound. Some opportunists were coming in there to pick it up thinking it was cheap, but now it's actually reversed back again. So this is a real danger zone for this stock. It could find support here and turn around and go back up again, but right now it's looking like it's potentially triggering a stop loss. It might be close to that, and I think the other issue here is that this person may not have worked out how much they're willing to lose at the start. So that's the other critical thing that you have to be aware. We can't tell you that, obviously. You have got to make up that mind for that part of it for yourself, how much you're willing to risk before you actually enter.
Yeah, quite a bit going on. Dale, did you want to add anything to this email?
Yeah, I mean, if you look at the stock, it's a CHESS depository, which means it's an overseas company. So that was a straight first thing that I talked about, or saw when he said, where do I find information on it? It is a US company. GQG Partners is an investment manager in the US for international investments and emerging markets. So if you want to find data on it, just go to their website and have a look at what they're investing in and what they're actually doing. But there's always I'm loath to say there's more risk in looking at a CHESS depository. And a lot of people want to get those because it gives them exposure to US companies on the Australian exchange. But you can make so much money out of Aussie shares that you can get so much data on and so much information on. It's not funny. And I was having this discussion with somebody about Bitcoin the other day, and they'd stopped trading Bitcoin because they realized that they can make money easier just with Australian shares. And this person's a good trader. And they went, I've got to muck around with all this stuff on Bitcoin, but there's so many shares I can trade that make me more money. But I do agree with Janine. The entry shows a lack of proper strategy. And at this point in time, if you want to get more data on it, just go to their website. As I said, it's gqgpartners.com, I think is the website. Go and have a look at that. But right now, I'd make sure I've got my stop loss set on the stock. Looking at it at the moment, if you go back to the chart, from where you bought, if I look here, where is it? From where you actually bought, let me turn my lock off. You're actually down currently around 14 or 15%. So if it dropped away below that, I wouldn't be holding this position at the moment. So, but you would find its fortunes does rely on some of the markets it's trading, because obviously it's a fund manager. So just be careful with it. Make sure you draw the line in the sand if it does go down. If it goes up, stay with it. And then, as Janine was saying, maybe you might want to get a little bit better strategy.
Yep, some sound advice from both Janine and Dale. I might even add the best information you're going to get on a stock is to look at the chart. So let's move on now, and time for our hot stock tip this week, which is Dale.
Oh, geez, you're thrown to me really, really quickly. It's hot down here in Geelong.
Yeah, well,
this one, sorry, mate.
I was going to say, while we got you, we might as well get you to do some extra stuff.
Yeah, well, I'm going to talk about Karoon energy, and it seems like it's a little bit more of an energy flavoured show today, because we've talked about a couple of energy stocks. But Karoon, they released their fourth quarter results for last year, and that was really good because they delivered full year production at the top end of their guidance, because its main offshore oil ship in Brazil, it's running at real near record efficiency, meaning there's fewer breakdowns, it's stronger outputs, and the efficiency, I think it's gone up from 92 to 98.7% or something like that. But looking through 2026, it's going to start off a little bit softer due to planned maintenance. There's a couple of oil rigs or whatever it is that are going to be getting some maintenance. But they expect it to rebound really strongly in the second half. So I've had a bit of a play around with their report and had a really good look at it. But let's go and have a look at the chart, because that's where I'm more interested in. Because when you go and look at the report, a lot of people may find it a little bit confusing. And I know I was helping somebody out the other day. They had a corporate action on a stock and they didn't understand it at all. I had to actually read into it, because Janine will probably back me up on this. Some of those reports, they can be quite confusing. But look at this from Karoon Energy's point of view. It's had this massive, massive fall. And again, it's very much like the flavour for tonight's show is we've seen a lot of stocks that have fallen heavily. And obviously that high there, its all-time highs back in July 2009, back at $11. It fell all the way down to March 2020 to 34 cents and had a big rise up. And this is a massive rise up if you got in it at the right time, and roughly, as you can see there, nearly 700% rise. This fall has just really confirming that the long-term move is over. It's really confirmed that. And as you can see, this fall down to this level was about 56, 57%. That's a number we've also seen tonight. So to me, this is all saying to me that it is holding up, and I do like this stock at this point in time. Probably a little bit too early, but it is telling me it's going to go up. I just need a little bit more strength. And again, we're just giving you plenty of time to have a look at it. This last bar on the left here, on the right, sorry, this is just today's data, so I wouldn't be too worried about it. But if we see, so currently the close is around about, what are we seeing, that $1.63. If it turns and by Friday it's closing right up the top, that would make me very excited about this stock. But I do like it at the moment. I'm not sure what your thoughts are, but this looks like a cracker to me.
Fantastic. All right, if you want more from us, check out our video, Will Trump's Europe Tariffs Crash the ASX? Here's how to profit.